So welcome to the session. I'm really delighted to be here supporting the Chamber and looking forward to talking with you all this morning. There will be plenty of time for questions later on, so just feel free to ask then. I tried to find a photo of myself with a bit of an international theme because we're going to be talking about customs and international trade. This is the best I could do, unfortunately, but I promise it's not Air Beach. It is actually outside of the UK quite recently. First time being abroad in a couple of years, which was good. So as Alan said, I set up one company coming up for 2 years ago. SDM Global Trade Consulting. The SDM is really my name, so not very innovative, unfortunately. But I do have over 30 years experience. Alan's pretty much gone through. I think the one thing I would say is that experience doesn't mean that I know everything, far from it. Every day I learn something new about customs and international trade as I work with my clients and I come across different challenges. So it's completely okay not to know everything, and it's completely okay to ask questions. There are absolutely no silly questions associated with customs and international trade. It's a very complex area. So today's slides, it will be quite high level, give you hopefully an understanding of some of the key things to think about. It's important though that the slides by their nature are going to be quite generic. There's a variety of different companies joined us today. And my experience has told me that every company has unique customs and international trade requirements because your supply chains are different. So hopefully from today's session, you'll take something that you can then think about how that applies to your company in terms of requirements, in terms of how you be compliant, or in terms of how you can, save the business some money and do things more efficiently. Quick mention of housekeeping. I've actually got some bread in the bread maker at the moment, so if you hear a bit of noise in the background at any point, it's just my daughter taking it out before it becomes a soggy mess. So with that, as Alan said, we're just going to talk about global trade generally, what that means in the supply chain, some of the things that are worth thinking about, how you can work with third parties and who these third parties might be that interact with your business in respect of customs and global trade requirements. And then we'll talk a little bit about customs approvals and what that might mean for you. So what does global trade requirements in the supply chain actually mean? I mean, for some companies, it's really just about the cost, whether that's the tax that they pay or sometimes their unforeseen costs. And many companies just see that as a consequence of trading internationally. For other companies, it could be delays at the border. Obviously, we now have Brexit and we're still continuing for a while. For other companies, it might be sanctions or embargoes. Obviously, we have the terrible war in Ukraine, and the consequence of that from a global trade perspective has been sanctions which have been put on individuals in Russia or selling certain goods to Russia. And sanctions and restrictions on trade are certainly not new, but something many companies have to be considered. Then we've got this concept known as free trade, which we heard a lot about during Brexit, that the UK will sign a lot of free trade agreements with different countries around the world and enhance our reputation and enhance our ability to trade and grow. What does that actually really mean? Or maybe for some companies, it's just confusion. A lot of companies, because of Brexit, were having to deal with customs and international trade matters for the first time. Sorry. So regardless of what it means, then the question is, how do you start to get your arms around it, either whether you're setting out in this journey or whether you're experienced in this journey, but you want to create efficiencies within the organization. And then it's worth thinking about, who does it affect? Well, primarily speaking to you today, it's going to affect you, whether you're an importer or whether you're an exporter. Then you will have to deal with customs requirements. But you might be a supplier of a company who imports or exports, and you're also in part of their supply chain. So their customs obligations will ultimately may flow down to you in the same way that your interaction with your suppliers and indeed your customers will become important from a customs perspective. It may mean that you need to rely on them to get data which helps you with your customs requirements, Or it may mean that the supply chain between you and your suppliers and customers is more complex because of who has the certain customs and international requirements at certain points during the supply chain. So I've found with many of my clients, they're dealing with customers based in the EU or suppliers based in the EU who have never had to deal with customs requirements and are working through this challenge at the same time. So this is not necessarily the gold standard of how you start to think about it, but ultimately I set out 5 things to think about in terms of getting your head around what you need to do from a customs or global trade perspective, or indeed improve the position within your company. The first thing is to really understand what your obligations are. What does it mean for you as a company or perhaps an individual when you're dealing with customs and international trade requirements? What are your requirements within that supply chain, and what are your obligations as related to your customers and your suppliers? The second thing that's important is to familiarize yourself with the data requirements. We may be very familiar with data requirements around the customs classification or the tariff codes or commodity codes as they're differently referred to. We may have some understanding that you have to declare a value. We may have heard of free trade and think about that in terms of origin. But what does it really mean, and what are your obligations associated with that? The third thing to do, and again, many of you may be well down this road, is to think about the approvals that you need, either to be able to trade effectively in the first place, or to simplify your processes, or indeed to reduce cost. And then the fourth thing that's also important is appointing a customs broker or a freight forwarder or an agent who can help you in this journey. The reality is that many companies rightly appoint or work with a customs broker who does all the customs declarations, or submits all the customs declarations, I should say, on behalf of the importer or the exporter. But it's important to explore what does that mean from the perspective of liability and responsibility. And the last thing, which should really underpin all of this, is the importance of being compliant. And I can't stress this enough. I mean, as I said at the outset, my company's been running for just under 2 years. And the majority of work that I've done over the past 12 months has been related to customs audits, and the customs authority coming out and looking at processes and documentation and auditing that. Those concerns can go away, or the audit process can be a lot smoother if you have a compliant process implemented in the first place. So let's start to look at some of those. And first of all, how do you get your head around what your obligations actually are? And for me, a good starting point is Incoterms. And really that relates to the relationship you have with your customers and suppliers, whether they're based outside of the EU. There's a few sort of myths around Incoterms, I think, particularly around the ownership of goods. But as a description, Incoterms they're internationally recognised terms of trade. They've been going for many, many years, since the 1930s. I think it's set by the International Chamber of Commerce. They're reviewed every 10 years, and as such, the version that's currently around is Incoterms 2020. They are more often used between two entities in respect of obligations and understanding who has certain responsibilities in a given transaction or set of transactions. But having said that, they're not mandatory. No one is obliged to follow Incoterms, although many companies do. They're not legally binding. It sets out the terms and how trade should take place. The legalities around the terms of trade or trade will come in the contract and not set by Incoterms. They do not confer ownership of the goods. Now, many companies rely on Incoterms as a point of where ownership actually transfers between two entities, but it doesn't. The conferring of ownership should again come in the contract or the terms and conditions. But what they do, and this is important, is it confirms who in a transaction is responsible for arranging the transport or the carriage. It confirms who is responsible for assuming the risk for the goods at a given point in the journey, and also who insures the goods. But fundamentally, and what's, I guess, of prime importance for this session, is it confirms who is responsible for clearing the goods through customs. So that then allows you to start to think about who's going to deal with the export, if it's a supply from the country of dispatch, and who is responsible for dealing with the import. And we'll look at the Incoterms in a moment in a table I've set out, but it is then becomes clear on where your responsibilities might lie if you're the importer, exporter, or indeed just part of the supply chain. So this table set out with the Incoterms in the left-hand side. They cover the mode of transport, and then it talks about who has responsibility for carriage, insurance, and customs clearance. Now, I don't propose that we go through these through all of them, because to some extent, hopefully the table is quite self-explanatory. What's important is that the top ones, all the way down from ex works to delivered duty paid, they can cover any mode of transport, whether it's roads, air, or sea. But the four at the bottom, they are uniquely allocated to movement of goods on sea or water. So there are restrictions depending on the mode of transport on what Incoterms can be used. But there are three that I would like to talk through in a little bit more detail, which are very commonly used and quite often misunderstood. So the first one at the top is ex works. And ex works essentially means that the seller places the goods available for collection at an agreed point, could be the factory door, quite often is the factory door, and then the buyer will collect the goods from that point. What that means is the buyer is responsible for the carriage, so they will pay the transportation cost. They are responsible for insuring the goods as well, and they are also responsible for customs clearances at the point of export and also at the point of import. So if this is a movement from the UK to Germany, for example, then the German company would be responsible for clearing the goods or arranging clearance of the goods in the UK at export, as well as clearing the goods at import into Germany. And there may be some complications around that that we'll look at in a subsequent slide. The second one I'd like to briefly chat through is delivered at place. And this is very commonly used in international trade, where there's an agreed place where the goods will be delivered. And in this case, the seller is responsible for carriage to the point of delivery, the at place part. He or she is also responsible for the insurance, paying the insurance. But there is a difference in terms of customs clearance, where the seller is responsible for clearing the goods at export, but the buyer is responsible for clearing the goods at import. And then the last one I'd like to chalk through is delivered duty paid, which is almost the complete opposite of ex works, where the seller agrees to deliver the goods to the buyer, probably at the buyer's factory or warehouse or retail outlet, and has all of the responsibilities associated with that. So responsible for paying all of the transport, paying all of the insurance, clearing the goods at export in the UK, again, if we use the previous example, and then at import in Germany. So there's a lot of responsibilities on the buyer if you use ex works, and there's a lot of responsibilities on the seller if you use delivered duty paid. What I would say about ex works is when Incoterms 2010 came out, there was a clarification issued by the International Chamber of Commerce that ex works was never really intended to be used for international trade. It was meant to be a domestic Incoterm. It's still widely used. And the reason that the Chamber said that is there are requirements if you export around zero rating for VAT, and if you don't have the proof of export, then you're not really entitled to zero rate the goods for VAT purposes. So the alternative to ex works is really free carrier or FCA. You can still have the same place of delivery. It still could be the factory door of the seller, but the subtle change and difference is that the exporter is responsible for the export customs clearance. The seller is responsible for the customs clearance at export. So if you think about Incoterms and you start to think about your relationship with your customers or suppliers, you can start to work out who has responsibility, and you can start to speak to your suppliers and customers, if you haven't done it, about setting Incoterms which are beneficial. Some of the key considerations then we come on to declaring the goods to customs. So there are various means of making a customs declaration. You can still make verbal declarations. So you can walk up to a customs officer in an airport and say, there's something I'd like to declare. You can still submit written declarations to customs, although they are becoming quite rare. By far, the most common means of submitting a declaration to customs is electronically through, usually through a third party as your customs broker, direct to the customs system, which is currently chief and is transitioning to customs declaration system, or CDS, by March next year. Lastly, you can actually still do physical declarations, and probably most people on this call have done a physical declaration. So that's where you're walking through an airport with a bag full of booze that you're brought back, and you can hear it clinking and you're not sure if you should go through the green or the red channel. So if you go through the green channel, then you're making a declaration that you've got actually nothing to declare. So all of us, I guess, have made a physical declaration. And just to touch on some of the key institutions that in the UK we deal with from a customs perspective, HM Revenue Customs obviously is the customs authority in the UK, but you may also have heard of the World Customs Organization, which is responsible for setting tariff codes on a global basis, which then flows down nationally to HMRC in the UK. And you probably heard through all the Brexit chat over the last few years of the World Trade Organization, which has responsibility for many customs aspects, including, importantly, free trade agreements and also customs valuation. So when we talk about declaring goods to customs, this is where there is a complication that can come up in associating with Incoterms. So the requirements are set out in the left-hand side. So the person making the declaration must be established in the relevant customs territory. On the right-hand side, we have a definition of established. So if we're talking about the UK in this example, so you must have a registered office, a central headquarters, or a permanent business establishment. The same criteria also applies essentially in the EU. And a permanent business establishment is a place of business where staff are permanently employed, or where the technical resources of the business are always present. Customs operations must be wholly or partly carried out here. So what does that really mean? So if we go back to the example of supplying to a customer in Germany, if you supply on a DDP basis, if we go back to the slide and look at DDP, we can see that you as a seller has responsibility for clearing the goods at export, so submitting an export declaration. So to be able to submit a declaration, you need to be established. So if you're a UK company, you're not going to have any issue in submitting a declaration because you will be established in the UK. However, under DDP, you also have a responsibility to submit or arrange for the customs declaration to be submitted in Germany. So if you're not established in Germany, then you're not eligible to declare goods to German customs to be the declarant. So there you have to make other arrangements, either agree with the importer, your customer, that they will do the declaration on your behalf and they will recharge you any of the customs duty or VAT or other charges associated with that. Or you look to appoint an indirect representative. We'll talk about representation in a moment. Or indeed, you will change the Incoterm so that you don't have that responsibility. And the same principle applies for suppliers of you who you may want to buy from them on a DDP basis in the UK. They may not be entitled to submit that customs declaration. So thinking about that in terms of establishment and requirements is very important. You obviously need to have an EORI number, economic operator registration and identification number, and I always get that mixed up, so I'm glad it's written down. That's basically how you're identified to the customs authority. And if you are established in the UK and the EU and you do declarations in both customs authorities, you will need to have two EORI numbers, a UK one and an EU one. And finally, if you want to pay your customs duty and VAT, import VAT, through a deferment account, you will have to have an approval in place with the customs authority. And a deferment account is essentially a bank account with HMRC where everything that you incur in terms of a a duty or a VAT liability in 1 month is taken directly from your bank in the following month. You have to have a guarantee in place with the Customs Authority, although that can be waived in certain circumstances. So now that we've understood that we have a responsibility to make a customs declaration, how do you do that? The vast majority of companies will do it through a customs broker or a freight forwarder or an agent. And they play a very important part in this whole customs clearance process. However, and I really can't stress this enough, mostly you outsource the work, but you will never outsource the risk associated with making customs declarations or indeed your obligations. In every scenario where someone is submitting a customs declaration on your behalf, you are responsible. There is no scenario at all where the exporter or the importer has no responsibilities in the eyes of the Customs Authority. There are, however, two forms of representation which can change whether or not the customs agent has a responsibility or an obligation in respect of the customs authorities. So the first representation type is called direct representation, and this by far is the most common representation that works between yourselves and a customs agent. And this is where the customs agent is acting solely in your behalf. They are representing you directly. So in the eyes of customs, they have no obligation. If there's a problem with that area, the entry that's submitted, if it leads to an underpayment of customs duty, then you as the importer or exporter will be solely responsible for that. The agent will have no liability in the eyes of the Customs Authority. There may be a commercial arrangement between you and your agent that deals with that commercially, but certainly not in the eyes of the Customs Authority. Indirect representation, on the other hand, is where there's a joint liability, and that's where their agent is acting on their own behalf and also your behalf, and they have a joint liability in respect of the Customs Authority. Customs agents do not like indirect representation for that reason. However, it is also true to say that because of the requirement to be established in certain countries before you can make a customs declaration, indirect representation is on the increase. So, for example, if you were selling into Germany on a DDP basis and the customer will not change the Incoterm, you could appoint an indirect representative in Germany to do that customs declaration in your behalf, because they will be representing themselves. And if the agent is established in Germany, they are entitled to do that, and they will also be representing you. So indirect representation is starting to become used a little bit more, but it is actually still quite rare. In terms of being compliant, and the principles of this, I think, are very relevant in every situation associated with customs, is you should provide a clear instruction to your agents as to how you want those goods cleared. You're responsible, so you should tell them how to clear the goods. And the means of doing that most efficiently is through a letter of instruction. And you give them all the information that they need. You give them the company information, you give them the customs data that's relevant, you provide them with the valid documentation, you confirm if there is a free trade agreement in place and you want to claim that, you confirm if you have a customs approval that you want to use, for example, a customs warehouse, and you confirm how that tax is to be paid through a deferment account. It is very, very common that the agent will get a lot of this information from the shipping line and will make their own decisions based on the documentation, but that's not best practice. And when customs come to do an audit, and invariably they will at some point, they will ask you if you provide instructions to your agent. So this is best practice, but I truly think this should be common practice for everyone. Then what you should do is make sure, after you've given those instructions, is that you get a copy of the declaration, and then you look at that, you review it to make sure you're happy that it's accurate and that it's compliant, and if not, you can take action to remediate that with customs. It's always better to make a voluntary declaration to the Customs Authority than it is for them to discover errors during an audit. So best practice is tell them what you want them to do on your behalf, get copies of what they do on your behalf, and then review that to make sure you're happy that it's accurate and compliant. And then you can also think about implementing metrics with your agent or broker, just to see how the relationship's going and how they're performing on your behalf. So that's the declarations, well on their way to be done. Now we need to think from a customs perspective, what are the key data elements that we need to think about, and how do we get them? So essentially there are the three pillars, if you like, of customs compliance in terms of data. So there's classification, which is often known as tariff classification, customs classification, and that's where the harmonized system code or the tariff code or the commodity code comes into play. So that is a vitally important part of data. And we'll look at these in a little bit more detail in a subsequent slide. The second one is the value of the goods, the actual, the customs classification determines the rate that's payable, and that rate is applied to the customs value. So the value of the goods declared to the customs authority. And then the third piece is the origin of the goods. And the origin of the goods is important for a number of reasons. Two prime reasons. One, there might be a free trade agreement in place, and the duty rate may fall from 14% to 0% under the free trade agreement. So origin is important from that perspective. But origin is also important because quite often there are additional tariff measures in place. So there may be anti-dumping duties on goods imported from China or other countries. There could be retaliatory trade measures. We had Trump tariffs a couple of years ago, some of which in relation to steel are still ongoing. So the origin of goods is important because it's part of how much customs duty will ultimately be payable, which is a little bit in the middle of this very, very basic diagram. So just talking about those in a little bit more detail, the tariff classification or the commodity code, that's based on the World Customs Organization Harmonized System. So the reason for the Harmonized System is to have a global approach to classification, so that if you're producing a product in one country and exporting it to another country, that to some extent the classification is the same. So there should be commonality, which helps make trade easier theoretically. And the way that the harmonized system works is globally, for every country that's a member of the World Customs Organization, which is most countries that we deal with in the UK or from a UK perspective, it's the same digits to the first 6 digits. So a commodity code is broken down into a number of digits. If we import goods, then we provide 10 digits. The first 6 of those digits are global. They should be global, the same 6 digits on a global basis. And then the next 4 digits are what's required for import, and that would be national. So when you declare goods, as I say, in the UK, you provide 10 digits. The first 8 digits are used on an export basis, and again, they are national. So if you're exporting goods, you would provide the first 8 digits to the customs authority on the customs declaration, and then the importer will add the final 2 digits. It determines the duty rate payable, so it's vitally important. It does determine whether there's a free trade agreement in terms of the classification, because a lot of the rules associated with free trade agreements are based on the classification of the goods, and that helps you understand whether goods will qualify or not qualify for a free trade agreement. So tariff classification is really a vitally important data element, and it's the responsibility of the exporter or the importer to determine the accurate classification. So for example, oftentimes I've seen goods coming from the US into the UK, and the US exporter puts their harmonized system code on the invoice. And that is then used when the goods come into the UK. The freight agent looks at it and uses that harmonized system or commodity code. It doesn't necessarily mean that the codes are the same between the US and the UK, because there are 2 completely different tariffs used. So the first 6 digits should be the same, but ultimately the responsibility in the UK, if you're the importer, for determining the correct classification is yours, and the same at export. The second vital data element is the customs value, and that's based on World Trade Organization rules. So the World Trade Organization has set out the 6 rules or methods, as are known, to determining the customs value. 90+%, probably even higher, is based on the invoice price between 2 entities, where there is a sale of the goods. And it's important because the customs value, there's a customs rate applied to calculate how much customs duty is due. If there's no sale, then you have to look through the different customs methods. So oftentimes, commercially, companies move goods free of charge or provide samples free of charge. The customs authority doesn't recognise free of charge goods, so some value will have to be allocated to the goods when they're imported. So customs value is very important. Also important, linking back to Incoterms, is in the UK, when goods are imported, the customs value that's declared to customs must be the cost of the goods plus the insurance, the amount of insurance to cover the goods, plus the freight. So customs duty, the customs value in the UK is the CIF value. So if you don't purchase on a CIF basis, you must still come to a proper CIF customs value when the goods are declared to customs, which, as I say, is normally cost plus insurance plus freight. And finally, the other key data element to talk about is the origin of the goods. And origin is actually becoming a very, very important and a very complex area, particularly because of Brexit. The origin determines availability or eligibility to use or benefit from free trade agreements. So one of the biggest free trade agreements we have at the moment is the Trade and Cooperation Agreement with the EU, between the EU and the UK. And that's based on UK goods being imported into the EU at a 0% rate of duty and vice versa. But the origin is important because it isn't goods being supplied from the UK to the EU necessarily. The goods must originate in the UK, so they must have sufficient UK content or meet an origin rule, which is set out in the agreement, before they can be imported into the EU at the 0% rate of duty, and vice versa. So free trade agreements are important, origins are important, because it does allow the duty to be reduced, but there are very strict conditions associated with that, which I think some people and some companies missed, thinking that everything that goes between the EU and the UK is free of customs duty, and that's not the case. As I mentioned in a previous slide, it's also important because of other tariff measures that may be in place. So you could have goods, as I said, of Chinese origin, which may be subject to anti-dumping duty. There was quite a famous case, if you're a trade geek like me, famous case around solar panels recently, which was all to do with whether or not the origin of the goods was Indian, which is where the goods were manufactured and came from, or whether the origin of the goods was Chinese, because the vast majority of the components and the technology required to make the solar panels came from China. So there was a whole court case around, is it Chinese origin, in which case there was a huge amount of anti-dumping duty applicable, or was it Indian origin, in which case there was no anti-dumping duty available. I think the outcome was India, so no anti-dumping duty, but it just reinforces why origin is important and why understanding that there are rules of origin and interpreting them according to your business is very important. In terms of tariff classification, things to think about are, what are they actually made of? What are these goods made of? What is their function? And what is their essential characteristic? There are general interpretive rules, which are basically 6 rules set out by the World Customs Organization that show you how to classify your goods. Now, I don't intend to go through them today because classification, you could spend a whole day talking about that and you'd all be, deeply sleeping or just leaving this seminar. There are companies out there that do classification and do nothing else. So it's quite a complex area. I think the important thing is that you have a responsibility to classify your goods to a 10-digit if you're importing, and an 8-digit to if you're exporting. And I had a client actually that were using a different first 8 digits on import and export, and for the same goods, so for this pen, hopefully you can all see, then the classification is the same: 1, 2, 3, 4, 5, 6, 7, 8 for export, 9 and 1 again for import. So there's no difference. In terms of valuation, things to think about are free issue goods. As I said in the previous slide, there are no free issue goods in terms of customs thinking. They always want a value to be declared. They will not accept a zero value, except in very, very, very rare circumstances and only through agreement with the customs authority. There are also additions, or there may be elements that you need to add to the cost value of the goods to come to the customs value. Freight and insurance that we've covered. Royalty and license fees may need to be included depending on the nature of those fees and depending on whether the sale of the goods, that international movement, is dependent on the application of these fees. Again, a complex area. Tooling and assists is another area where you may have to add these elements to the value. And from a customs perspective, a tooling or an assist is where, for example, if you're a UK company, you may provide blueprints free of charge to an overseas manufacturer to manufacture those goods, or you may indeed provide machinery or other equipment to manufacture these goods. Now, the customs value includes, it's made up of the cost of the goods, and the cost of the goods is made up of overheads, profit, and material costs. And if the overheads would normally be machinery and that's provided free of charge, then the customs authority expects that cost to be shown on goods that come the other way. So if you send goods to China, if you send machinery to China free of charge and you get product back from China based on the machinery that was used to manufacture them, then an element of the value of that machinery, even though you provided it free of charge, should be included in the value of the goods coming the other way. Now, I appreciate I've gone over that quite quickly. It's a complex area, so happy to take a question at the end on that. Some research and development costs may also have to be included in the customs value. And again, that depends on the nature of these costs. Research obviously doesn't always lead to the development of a product. So my argument has been, if there's no physical product comes at the end of it, then there's nothing obviously to be valued. As well as adding to the value, there are eligible deductions. If you use a buying agent and you have buying commission costs, then you don't have to include them in the customs value, but they are subject to the value for VAT. If you get a discount from a supplier which is freely available, then again, that discount can be deducted from the customs value. And the customs value is only associated with the cost up to the point of importation into the UK. So any post-importation costs, and that could be installation of machinery, training to use machinery, or internal transport costs, they do not need to be included in the customs value, but the internal transport costs do need to be added when VAT is calculated. Origin, again, we've talked about this really. Preferential origin is where there's a free trade agreement. So there are rules associated with preferential origin, which are always set out in the agreement. And as I say here, the EU-UK TCA is a free trade agreement met on origin rules, based on meeting origin rules, sorry. And all of the origin rules are within the trade agreement. So if you're having trouble sleeping one night, then feel free to go and have a read at that. Non-preferential origin is where there might not be a free trade agreement in place, or the goods themselves don't qualify, but you still have to declare the origin of the goods, and that's known as non-preferential origin. And that also can relate to other measures that I've mentioned, such as anti-dumping duty. And there are actually some countries that insist on the goods being the origin of the goods being clearly mapped on the document, sometimes stamped or etched onto the goods, e.g. Saudi Arabia. and that's got nothing to do with a free trade agreement. That's all about Saudi wanting to understand the origin of the goods, and that's non-preferential origin. And the rules associated with non-preferential origin are always set out in the customs legislation. So the UK non-preferential rules are set out in the new UK legislation, which came into force after Brexit. In terms of origin, again, I'll just cover this quite quickly. There are three general considerations: goods that are wholly obtained in a territory, and that's generally animals that are born, or plants and other derivatives that are grown here, or minerals that are extracted. And it also includes the land and the sea around the country or the customs territory. Wholly produced is where goods are produced in a country using only raw materials or components which are of that country's origin. And it's also very important that goods have to be sufficiently transformed. So they have to undergo a certain transformation, and they have to be more than what's called insufficient production. So if you're doing a full manufacturing process, the chances are that's going to satisfy the rules of insufficient production, because they cover things like, storage of goods, certain simple cutting of material, simple handling. So if you're doing manufacturing, you will meet those criteria. Again, this is quite a complex area that's becoming more and more important at the moment. Some other things to think about in terms of global trade, which are a little bit beyond customs. Primarily, we have export controls. Now, many goods are subject to strict control. They could be military goods, for example, and in the news this week, you may have read about some Russian military goods having UK components, and that's never a good sign. The UK and the US in particular have very strict controls to make sure that certain countries don't get any military goods or military technology, and that's called export controls. But there are also dual use goods, and these are goods that are designed for civilian purposes, so not military, but could have a potential military application. And both these criteria of goods are very tightly controlled. If you export from the UK, then your goods may be subject to UK export control, so you may need a license from the UK Export Control Authority to be able to ship those goods. If your goods contain UK and US components, then you may also have to meet US rules, which tend to be very much stricter. So export controls used in the military, obviously, but also used in other applications such as aerospace, defence, etc. Sanctions and embargoes I touched on. There may be restrictions on goods, on the ability to export goods to certain countries. We don't deal, obviously, with North Korea, for example. Exports to Russia are very tightly controlled and very tightly restricted. But it can also be individuals. The sanctions that we've heard about that the UK has imposed because of the Ukraine war is on a lot of Russian individuals, and it can also be financial institutions. So doing business in certain countries or with certain people or through certain finance can become very, very complex. But it's so important to be aware of them, because the consequences of getting this wrong can be very, very severe, particularly if you breach US sanctions. And I think the last thing I really wanted to talk about here is, although there are a lot of obligations, there are many approvals available to help ease the burden and reduce the cost. So, for example, there are simplifications available. This might be number 3 on this list, but simplified customs procedures have been in place for a while. There were special derogations when Brexit came in, that you could produce simplified declarations at the customs border and provide supplementary declarations at a later date, or indeed your initial border customs declaration could simply be a record in your own commercial records that you keep, providing that the supplementary information was presented later. So that allows you to clear goods through the border quickly, but you have to remember to submit the declarations at a later place. Customs warehousing is available to store goods without having to pay any customs duty or any import VAT or any other duties, without limit of time. So you can put goods into a customs warehouse and they can sit there until you're ready to move them. That can be useful if you maybe import goods into the UK and you export them to many different countries as well as the UK. So rather than importing, paying a lot of customs duty, and then you send the goods out to Germany, the customs warehouse allows you to manage that process more effectively. Or it may be that you want to store the goods while you wait on documentation, so you can bring them into a customs warehouse. And then the final one is processing, probably most commonly referred to in the UK as inward processing or outward processing. So the whole concept of customs duty is it's payable on goods that are going to stay within a customs territory. So if you import goods into components and raw materials into the UK, for example, which are going to be manufactured into something which will then be re-exported, you can use inward processing, which means that the customs duty and import VAT won't be payable, providing that you meet the terms of the approval and you re-export the goods within a certain time. And it is important to stress that for all of these approvals, you do need you need something in place, an approval in place with the Customs Authority in the UK HMRC. So that's really all I wanted to say. I know it's been a bit of a fast-paced whistle-stop tour. Hopefully you've learned something, but more than happy now to take any questions that you've had on anything that I've covered, or indeed if you have a question associated with something I haven't covered, then I'll do my best to answer.